Now, there are a lot of fitness gadgets out there. In my quest to get fit, I tested 17 of them over the last few months. At least one personal trainer I know was a little bit skeptical.
Yeah, I've been watching these new technologies come to the market for almost as long as I've been a personal trainer. They're just tricks and tropes. They're not much different than the Bowflex machines or, to be honest, the original Jane Fonda workout video.
But some of these gadgets that are just coming to the market do so much more than what they used to do, just tracking your activities. Out of all of them, this chest strap was my favorite. It comes with a robot coach that points to the future, one where you might not need a human trainer at all. And it works like this. You wear the chest strap so that it can read your heart rate, and that connects to Move's free app that talks to you.
Welcome to Move Heart Rate Hit Outdoor Running. Let's get moving and warm up in Zone 2.
Move's computerized coach tells you what to do at that exact moment, whether you're running outside or you're doing body weight exercises indoors.
Swing your arms faster to get your legs moving quicker. Let's crush this round.
And by reading your heart rate, she knows exactly how hard you're working. She keeps you honest.
Way to go, you are in the target zone. Keep pushing, you're almost at the end of the round. Don't give up.
I've been running for 7 years now, and my biggest problem is that I never push myself hard enough. I end up going on the same slow, comfortable 30-minute jog, but the Move HR Burn blasted me out of that rut. By the end of these half-hour exercises, I was drenched in sweat in a way that I never am when I work out alone. Training with a real person is great, whether that's your group instructor or your coach or your personal trainer. But humans, they're expensive. For the rest of us, this $60 gadget is all you need.
what does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness. Don't you think?
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks.
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
To expose everything you won't admit. And action. This entire video is based on a true story. When I do like motivational speeches or even tell myself like love yourself and you should love yourself.
This is Lily Singh. But to fans all over the world, she's the YouTube star Superwoman.
What up, everyone? It's your girl, Superwoman. I know we can change the world for the better, one positive day at a time.
My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room. They had no idea.
Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone.
Until someone called them, like a family member from another part of Canada, was like, Canada, is your daughter making videos? And the mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're going to go to school and then graduate and then get married and then get a job and have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
It was 2010, and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe, and my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oh, Lily, wear the rest of your skirt, huh? I teach you like this, to walk around like this, showing everything to everyone.
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And we're pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's a real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up, everyone? It's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about, like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name.
Maybe there should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She starred in a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up!
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views and the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, you know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, I mean, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left the Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company. And that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW.
Some examples. These tag team partners are called baby faces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! It's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag #GiveDivas_a_Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves ahead.
Thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get to Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing in new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing in a new management team, et cetera. There's a lot that we've gotten done, but this is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world, and I just want to get back to doing business.
It's quite interesting. You said true believers.
Yeah.
Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, et cetera, that is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution, of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well,
peanuts by the standards of
profits would help. So at some point, we absolutely have to become profitable, and that's part of the plan.
Do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things spar against each other?
I don't think that profitability and culture are their issue. It's the company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues, that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes because working with governments, regulators, et cetera, sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got a sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire. And I think as a company, we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
But some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that when these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is this spirit of innovation, the spirit of can-do, et cetera, but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are three keys to transport and where the industry is going: autonomous, electric, and shared. And I think all three are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering in
to a layman like
feathering
me?
Crashing. Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, this autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
And will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
And so within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also,
I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars, I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars, you have to deal with existing roads, existing everything. Flying cars, essentially you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back, somewhat reluctantly, back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week, he said that Uber should focus on repairing its market share in the US and on key European markets, rather than going going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is
You
a
had
brand.
that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for
Do you
everyone.
want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people. That's
telling me.
Just not interesting. I do think seriously though that the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point, we are leaning forward. In 2018, for us, is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy, and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question: do you think that you have solved that part of the culture? But secondly, do you think that this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement of the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue, perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking in some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers. The tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous because they have followership within the company because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership, so it is incredibly important for the top performers to actually be held to account more radically than anyone else because they're the ones who have followership at the company, and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values, and one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms because to me, it's not just these values that you put on the wall and kind of people stare at and you know, it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Is that, do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company. And to some extent with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes, yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in the space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
Well, welcome to a Thursday edition of Bloomberg Business Week. I'm Jason Kelly, virtually alongside Alex Steele, sitting in once again for Carol Masser, and a little bit of a different tone here, Ms. Steele.
I love me a sell-off. I mean, it super sucks if you're long and you wanted to cash out tomorrow. But, I mean, a 5% sell-off in the NASDAQ. We haven't seen that since March. Like, this is real. This is what we kind of been waiting for. I love days like this, and the close is always super interesting when we get into it.
Yeah, and we're going to get into that in a little less than 2 hours, see where we end up here. But right now, it is a very, very red day. Let's get some of those numbers and some details from Charlie Pellet. Hey, Charlie.
Right. Well, hello there, and here's what's going on. Let's get right to the numbers because it is a day of steep losses for the U.S. stock market. Got to keep it locked into Bloomberg to find out how we close, not only how we close, but, of course, how Asian markets react tonight. S&P lower now by 126, down 3.5%. Lows of the day, the Dow down 820 points. That's a plunge of 2.8%. NASDAQ down 578 points, as Alex mentioned, close to 5%, now lower by 4.8%. 0.78%. 10-year yield, 0.61%. Gold down 0.6%. 19.31 the ounce. And West Texas Intermediate crude down 0.3%. 41.39 for a barrel of WTI. Equities are tumbling by the most in almost 3 months as the rotation away from high-flying tech stocks gains steam. Investors questioning the sustainability of lofty valuations. Got to mention briefly some of those tech names. Tesla, for example, plunging 8.1%. Apple down 6.3%. Microsoft down 5.8%. Facebook down 3.7%. Amazon now lower by 4.9%. Again, recapping here, stocks selling off with the S&P down 120 points, a drop there of 3.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Well, Charlie, thank you so much. We will be keeping in close touch with you throughout the next few hours as we see where that market closes and some of the reaction after the closing bell. Always some interesting headlines. It feels like every day there's something new. And underneath all of this are questions around the economy and the markets. So let's set the Business Week agenda with our stellar team. Michael McKee, International Economics and Policy Correspondent for Bloomberg, along with Dave Wilson, Stocks Editor for Bloomberg. He joins us from New Jersey. So, Michael, I want to start with you because we came into today, I think, thinking, all right, jobless claims, we're going to get those again. What is that going to make of it? Or what are we going to make of those, and what's the market going to make of it? How much does that fit into the narrative today from your perspective?
If you want something to sell on, you got some not so good news today. It wasn't terrible news, basically just kind of confirming the status quo in the sense that jobless claims, the headline number we're used to fell, but because they changed the seasonal adjustment method, that's kind of irrelevant because you can't compare it to the week before.
Right.
So if you look at the unadjusted claims, they rose, and the total number of people who were on the unemployment rolls of one form or another in the week that they did the jobs report was 2 million higher than the week before. So the jobless claims picture wasn't good, and then we got a disappointing services index number. It dropped a little bit, and the new orders numbers dropped a lot, and hiring in that index remained under 50, under expansion. So overall, the best you could say is it's sort of status quo for a pausing economy. It wasn't terrible news, but it didn't give you the idea that we're really expanding fast.
Which leads to the whole excuse to sell thing, Dave Wilson. And what's paramount in the sell-off is the growth is getting killed, and there's the rotation to things like Carnival, hotel stocks. So I have to wonder, Dave Wilson, if you think it's more of a vaccine-related thing or this is normal market churn.
Well, I mean, there are lots of bits and pieces. I mean, if you want to cite Carnival, we should note that one of their cruise lines, Costa in Italy, is going to start up operations on Sunday. They're going to be sailing again. Similar story for a German unit, which is going to restart November 1st. We're talking about AIDA cruises there. So, you can look at that company and maybe some of its peers and say, okay, things are starting to come around. When you look, take a step back and consider what's going on with tech stocks in a broad sense, I mean, there's no doubt they've had quite a run, especially the biggest tech companies. All you have to do is think about the comparisons we've seen in the last few days, with Apple's market value rising above the value of the entire Russell 2000 index of smaller companies, or Tesla, as I pointed out in the chart of the day the other day, basically being equivalent to the market value of 18 other automakers around the world. Ford, General Motors, and a whole lot more. So things kind of got extreme. And like Tesla, you kind of saw it come down once they got past the stock split they did. And then Apple kind of followed suit. So, it's almost like they were setting up for something. And actually just put out a chart that one of my colleagues, our colleagues, put on the terminal, talking about this technical indicator, the relative strength index on the S&P 500, basically a gauge of where stocks are relative to history, showing that they were poised to fall in a way they hadn't been since January 2018 when they really fell out of bed. So, it does kind of show you that what we're seeing today, I mean, certainly could have been anticipated, maybe not the timing, but the reality of it at least.
So, Michael McKee, all of this on the eve of Jobs Day. Whoa.
You remind me of that old song, The Eve of Destruction.
Yeah, man.
We could be. We had this slowdown, and there was a lot of talk about the idea that we might see a negative jobs print. I think that's kind of gone out of the market, whisper numbers, but the idea that we could see a slower than expected jobs number tomorrow, where the forecast is for 1,350,000, that's certainly out there. We could see that, and even if you got 135, you're still going to be lower than you've been since we started rebounding in May. So it's probably not going to be a very good report tomorrow. I'm going to be interested in the participation rate, because with the claims numbers still so high, you got to wonder if some of those people are going to start dropping out of the labor force.
Yeah.
And then your hiring, gets even more difficult.
Or on the flip side, how do we factor in the whole childcare issue in terms of people dropping out or unemployed, like with the claims today because of childcare?
That's going to be a little harder to tease out of this report, because it was for August, and some school districts started partway through August, but really September is when you're going to see that effect. And that will figure into the number of people who drop out of the labor force, because people stay home because they have to take care of their kids and they can't go back and get new jobs.
Right. Interesting. All right. So much to unpack, and we will bring it to you in great detail tomorrow. In the meantime, our thanks to Michael McKee, International Economics and Policy Correspondent for Bloomberg. They're in our Bloomberg Interactive Broker Studio. Our thanks as well to Dave Wilson. He'll be back at 3:30 with his chart of the day and the song of the day, and at 4 just after with his stock of the day. Let's do the Bloomberg Business Week Bite of the day. It's one number that tells us a lot. Today's number, 7,000. Amazon will hire an additional 7,000 people for permanent jobs in the UK this year, increasing its workforce to more than 40,000 to deal with a surge in demand for online shopping. The company has already added 3,000 jobs to its fulfillment centers there in the United Kingdom, sort centers and delivery stations. The additional roles will be in its corporate offices and 2 new fulfillment centers, Alex Steele. So there you have at least one
Someone's
part
hiring.
of the economy, exactly, growing a little bit, speaking of jobs. And speaking of what we're going to be doing here over the next few hours, we're going to check in on the virus, we're going to check in on politics. Excited to have Jeff Tannenbaum with us. He was the subject of a big Bloomberg story. He's going to talk about choosing investments with ESG in mind. We're also going to talk about tech valuations. That's a timely conversation, thanks to you.
Yes, Aswath Damodaran of the NYU Stern School of Business. He is awesome. He has lots of opinions, distinction between value and price. He has lots of thoughts. We'll talk overall tech and kind of where we sit right now.
Yeah, excited to do that. And we do have that big election coming up. We're going to catch up with the founder and CEO of Vote America. It's a bipartisan group to talk about mail-in voting, all the things we're hearing about when it comes to that election. We're like 60 days out at this point. Actually, it's September 3rd. It's in 2 months.
Is it, please? Can it be?
Can it be over soon?
Like now.
Yeah, but who's to say? All right, let's get down to Nancy Lyons now in Washington. She's got world and national headlines. Hey, Nancy.
Hey, Jason. Well, both presidential candidates are on the road today. Democrat Joe Biden is in Kenosha, Wisconsin, where he's meeting with community leaders. Following the police shooting of Jacob Blake, he'll also be meeting with members of the Blake family. President Trump is heading to Pennsylvania for an evening event in Latrobe. Well, with just 2 months left until the election, Facebook says it is taking additional steps to encourage voting, to minimize misinformation, and reduce the likelihood of post-election civil unrest. The company says it will restrict new political ads in the week before the election and remove all posts that convey misinformation about COVID-19 and voting. Lawmakers on Capitol Hill have their work cut out for them when they return to D.C. next week as they try to tackle the budget and a deficit and a pandemic relief package. Bloomberg's Amy Morris has more from Washington.
Congress has only a few weeks to hammer out a budget deal to avoid a government shutdown. Plus, the Congressional Budget Office forecasts a record $3.3 trillion deficit after the federal government added more than $2 trillion to help prop up the economy during the pandemic. And while some lawmakers believe coronavirus relief and the budget should go hand in hand, Senate Majority Leader Mitch McConnell says he's not optimistic any stimulus package is going to pass. In Washington, I'm Amy Morris, Bloomberg Radio.
Elon Musk's SpaceX launched today 60 new Starlink internet satellites into orbit.
3, 2, 1, 0. Ignition. And
it's the 12th batch of satellites for the company's broadband network. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Nancy, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly and Alex Steele here with you. And one of the most read stories, we know that people are getting back to the gym, sort of, in the sense that gyms are open, sort of. But you got some grumpy gym members if you belong to the New York Sports Club because bing, 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 your bill's due.
Yeah, so actually, anecdotally, one of my producers for TV canceled her membership 2 months ago, and they still charged her through her Chase account. And she also got charged for like March and April of this year as well, too, and everything was shut down. I mean, you don't want to do that in this kind of biz.
You don't. And this is a company, so New York Sports Club, it's owned by Town Sports International. As you can tell by the name, they operate the DC Sports Clubs, Washington Sports Club, I think they're called, Boston Sports Club as well. This has been a struggling business, and I know enough about this to be dangerous. This is that sort of dreaded middle. You know, it's not a discount and it's not a high end. And they've really had a hard time. They're on the verge of bankruptcy, but they're still charging people. And you've got people, anecdotally, again, through this story, who are getting charged because they're saying, well, the gym's open. They show up to the gym to cancel their membership, and guess what? It's not open.
It's totally like that Friends episode.
Yes.
Where it's like, I just want to quit the gym.
I know, I had that exact same thought. Wow, look at you with a pop culture reference.
Just that.
It's
I can quote
really
like
just
every
that.
episode of Friends. But because also you have to wonder, too, that even if you're a gym rat and you want to go back, like I want to go back to the gym, but I'm not going to go quite yet. I mean, it's, still 33% capacity. There are lots of limits, masks, ventilation guidelines, and all that. So gyms are going to be in that tricky spot.
Yeah, you're all about the virtual Pilates.
Virtual Pilates. Yeah. It works.
Yeah.
It really works.
I'm
and you're about
Peloton myself.
the T-shirts?
I'm about the Peloton.
Peloton.
Love my Peloton, yeah. I haven't been on it since I've had this cold, but got to get back. Got to get back. Anyway, yeah, that's my jam. All right, this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Steep losses for U.S. stocks, just about the lows of the day. Let's get right to the numbers. I'll give you the story in a moment. S&P down 130 now at 3450, a drop on the S&P of 3.7%. The Dow is down 865 points. That's a decline of just about 3%. The NASDAQ Composite Index plunging 592 points, down 4.9%. Equities tumbling by the most in almost 3 months as the rotation away from high-flying tech shares gains steam, with investors questioning the sustainability of lofty valuations. You got to keep it locked into Bloomberg Radio for the very latest. We'll take you right through the close and, of course, tell you how Asian markets react tonight. 10-year up 8/32 with a yield of 0.62%. Gold down 0.6%, 19.30 the ounce. And West Texas Intermediate crude now lower by 0.7%, 41.20 a barrel. So again, recapping here, steep losses for the U.S. stock market on this Thursday, with the S&P down 129 points now. That is a drop of 3.6%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Well, clearly the market is reacting day to day to some extent on the underlying health crisis. And we saw some headlines yesterday about the CDC getting in touch with states and local governments and public health officials saying, get ready for November 1 to start thinking about a vaccine. That's what we're all looking toward, but it's complicated. Fortunate for us, we have Dr. Eric Toner to help us break it down. Senior scholar at Johns Hopkins Center for Health Security at the Bloomberg School of Public Health. As you can probably tell by the name, the Bloomberg School of Public Health. It's supported by Mike Bloomberg, founder of Bloomberg Philanthropies and Bloomberg LP, parent of this radio station. Dr. Toner, really nice to have you here with Alex and myself.
Well, thank you, guys. Happy to be here.
All right, so we keep such a close eye, as everyone does, on the headlines related to a vaccine, but the devil's in the details here. Help us understand, once we have it, how does it get allocated? How does it get distributed?
Well, those are really important issues and ones that are still being worked out. There are several official committees working on the allocation plans and other groups working on the distribution plans. Our own group issued a report last week proposing our ways of thinking about the allocation distribution schemes. The National Academies issued a report yesterday on this same topic. So a lot of thinking going on now. A lot has to be figured out before the vaccines become available.
So what did you make of yesterday and the whole we could have a vaccine ready November 1st for distribution, guys, get your states ready?
Well, I think it's perfectly appropriate to be telling states to get ready, because there's a heck of a lot of work to be done to be prepared to distribute vaccine on this scale. This is not anything we've ever done before. But I think, and most people I know think, that a November 1 date is not realistic by any means.
And what is realistic at this point? I mean, you are keeping even closer track than we are, and certainly that a lot of investors are, in terms of when and what it's going to look like. What is your best guess for when and what?
My best guess, and it is only a guess, is that sometime this winter, whether it's January or February or possibly even December, we will have one or more vaccines, probably more than one vaccine, that achieve emergency use authorization. That is not fully licensed, but given authorization for use, considering the terrible emergency that we're in. This would be really complicated, because if there's more than one vaccine and it's not fully licensed, it's going to be very complicated. And two of the leading candidates right now have to be maintained at deeply frozen state, minus 50 to 80 degrees. And so it's not going to be something that can be delivered in a pharmacy or a doctor's office. There are going to have to be special locations set up to administer these vaccines that have to be maintained under such intense cold.
Oh, well, that's interesting. Can you talk a little bit more about that? Because I was kind of like, oh, my doctor will call me, I'll go into the office. Like, are we talking about like the CDC setting up like a mass tent kind of thing in a Walmart parking lot?
Yeah, it may well be something like that, because it has to be a location where people are not crowded together, because that obviously would defeat the purpose, but where there are special freezers that can store the vaccine as it's being distributed. So it's really hard to see how your doctor's office could do this or a pharmacy could do this. So right now, 4 states and the city of Philadelphia have been tasked to come up with distribution plans. And as you noted, all states have been advised to prepare for November 1, even though I don't think that's a realistic date. But, it's going to be an extraordinary challenge.
And this will be different than maybe, I'm sorry to be so pedantic here, but it's going to be different most likely than just going and getting a flu shot, sort of in the way that Alex just alluded to.
Yes, it's likely going to be quite different from that. The other issue with these vaccines is, at least for several leading candidates, more than one shot, more than one dose is required. So you have to come back a month later and get a second dose. So if there are several vaccines, you or somebody will need to know what vaccine you received the first time around so that you get the appropriate dose on the second time around.
Right.
I don't think we can count on most patients remembering what vaccine they got. So there has to be a system to track this.
Right. All right. We're going to continue this conversation because I know Alex and I both have a few more questions, probably more than a few more questions for Dr. Eric Toner, senior scholar at the Johns Hopkins Center for Health Security at the Bloomberg School of Public Health. He's joining us on the phone from Baltimore. He's going to be back with us on the other side of some news. This is complicated. I feel like we oversimplify this because we're so trying to be optimistic and excited about the possibility, but this ain't easy.
Well, I didn't think about the fact that you had to have another vaccine and that it wouldn't be distributed through a doctor's office who keeps track of it. Like, you're totally right. Like, who does that? And what if you mix a vaccine together? Like, what happens then? Like, you trust
and what if you forget, or it's like, you go to a different place, and as you say, they don't have the right records and all of that, and people are going to be super agitated about it to begin with.
Yeah. What vaccine did you get? Well, I got this one. What'd you get?
Exactly. Where'd you get it? Do I have to wait in line?
Yeah.
More ahead. It's Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Coming up, we're going to continue our conversation with Dr. Eric Toner down at the Johns Hopkins Center for Health Security. But before we get to that, let's get back to Charlie Pellet. It's an ugly day in the markets.
Yeah, absolutely right, at least for the bulls, Jason. Let's get right to the numbers. Big numbers indeed to the downside. Here we go with the S&P down 119 points. That's a drop of 3.3%. Dow Industrials down 772, lower by 2.6%. The NASDAQ Composite Index now down 555 points, a drop there of 4.6%. The Dow, the S&P, NASDAQ all close to lows of the day. Steep losses again for U.S. equity markets. Got to keep it locked into Bloomberg Radio for the latest. The 10-year yield now 0.62%. Gold is down 0.4%. 19.34 the ounce. And West Texas Intermediate crude down 0.2%. 41.44 a barrel. Equities are tumbling by the most in almost 3 months as the rotation away from high-flying tech stocks gains steam, with investors questioning the sustainability of lofty values. Drug makers have made big promises for a quick turnaround on coronavirus vaccines. The moment of truth for the front runners is coming as soon as this month. The first results showing whether a vaccine can stop people from getting the virus could come by mid-September from AstraZeneca, according to Airfinity Limited, which is an analytics company that tracks drug trials. Shares of AstraZeneca, the ADRs here in the United States, lower now by 3.3% at $54.01. AstraZeneca has pledged as many as 30 million doses to the UK by the end of the month. Dr. Jason Farley is a nursing professor at Johns Hopkins Bloomberg School of Health, and he spoke this morning with Bloomberg Radio and Television.
We need to be hopeful about these findings, of course, but they are preliminary. So what we're basically going to be seeing is patients who've been enrolled in earlier trials, their antibody responses. We won't know much about durability. We won't know much about the potential for exposures or reinfection, but we'll know how well they do or do not produce antibodies, which is similar data to what we've already been seeing in the studies that were done in phase 2.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Airfinity, by the way, says 2 other contenders, the U.S.'s Moderna and the U.S.-German partnership of Pfizer and BioNTech, may also have initial data before a key Food and Drug Administration meeting on the virus vaccines that's scheduled for October 22nd. Moderna shares, they are up today, up by 0.9%. Shares of BioNTech down by 4.9%. Recapping equities lower across the board. S&P down 117, down 3.3%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, thank you so much, Charlie. You just heard him talking about Dr. Jason Farley, professor of nursing at Johns Hopkins Bloomberg School of Public Health. So let's continue that conversation now with Dr. Eric Toner, a senior scholar at Johns Hopkins Center for Health Security at the Bloomberg School of Public Health. As a disclaimer, I should point out, Bloomberg School of Public Health supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. So we kind of got the lay of the land there, which the different types of vaccines and which might come first. And I guess my bigger question to you is, when something does get viable, how should that be talked about in the medical community when just in the last few weeks it seems like vaccine proposals have become so politicized? What does the doctor community do about that?
Well, I think the doctor community needs to try their very best to ignore the political noise and focus on the facts, focus on the science. What do the trials tell us? What does the data show? It's really important. It's important to have a vaccine out quickly, of course, but it's even more important to do this right and to have a vaccine that we have confidence in, that we know is effective, and that we know is safe. And there's been some talk in the last few days of maybe we can cut the phase 3 trials short if they're showing good response. I would caution against that. I think we need to go all the way through the trials, particularly to be assured of the safety profiles of these vaccines. So I think having a vaccine this fall is unrealistic, and if we were to do that, it would be a mistake.
Well, so much politics have entered into this, Dr. Toner. How much do you worry about that? And with politics, I would also ask the question about the public perception of safety and efficacy. It feels like those things go hand in hand.
No, you're absolutely right. It's not just whether the vaccine is safe and effective, it's whether or not people feel like it's safe and effective. The vaccine does no good unless people want to take it. And, there's a lot of distrust now, distrust focused on elected officials, distrust in the scientific community, distrust in medicine, and distrust in authority in general. So, building trust, being transparent, and really talking about how we know that it's effective and safe, I think is the most important thing that we can do.
So going forward, say in the next, couple weeks, as people really return to work, it's after Labor Day, what are some of the key data points or dates that you're going to be watching to check some boxes?
Well, I think the important thing to watch is how the phase 3 trials are going. How many patients they're enrolling, or how, and when we get intermittent data reports, to really look at those carefully. So I think there's nothing else to look at except the data that comes out, and look at that carefully.
All right. Well, we really appreciate your time, that and of your colleagues, your time and that of your colleagues. Thank you so much. Dr. Eric Toner, Senior Scholar at the Johns Hopkins Center for Health Security at the Bloomberg School of Public Health. And as Alex said, of course, the Bloomberg School of Public Health is supported by Mike Bloomberg, founder of Bloomberg Philanthropies and Bloomberg LP, the parent company of this radio station, and we rely heavily on them, as do many people. When you look at sort of the virus tracking, the cases, so much of that good information does come from our friends down at Johns Hopkins. And, I'll just underscore something that he said, which, listen, it's 2020, so we have to say it. Facts matter. Science matters. We have to be able to trust in verifiable data. Full stop.
Yeah, I just wonder how that gets played out, because I feel like both sides of the political aisle are going to use it as some kind of political weapon before November 3rd. It's not going to affect you and me, because we're going to get, we're group 4. Like, we're getting vaccinated like next fall.
Yeah.
But for the frontline workers and for my parents who are in their late 70s, early 80s, this matters. And I wonder how doctors choose, which vaccine to use on which person. I don't know how that even works.
Exactly. Well, it's a conversation we will continue to have on this program. That is for sure. Stay in touch with us for all of that. In the meantime, let's get down to Washington. World and national headlines. Nancy Lyons has those. Hey, Nance.
Hey, Jason. Well, Democratic presidential hopeful Joe Biden says he's hoping he can help residents of Kenosha, Wisconsin heal following the police shooting of Jacob Blake. He's there today, ready to begin a community meeting. He's also spending some time with the Blake family. President Trump was there on Tuesday, but did not meet with the family when he visited. There's outrage from cities across the country after President Trump ordered the government to look into defunding cities over what he calls lawless protests. New York Mayor Bill de Blasio says he'll take legal steps to block the move.
The Supreme Court has spoken. The President of the United States can't interfere with federal funding for cities and states just because he feels like it. We have laws in this country.
New York, Portland, Seattle, and Washington, D.C. are named in Trump's memos as cities that might lose funding. Russia is brushing off allegations that the Kremlin was involved in poisoning Vladimir Putin's most determined critic, Alexei Navalny. A spokesman for the European Commission, Peter Stano, says this is something that Moscow needs to investigate in a transparent way.
This type of chemical agent is not freely available. It was used on Russian territory against a Russian citizen. So it's very important that it's thoroughly investigated and that the answers are provided both to the Russian public and to the international public.
Senate Democrats are calling for sanctions against Russia for interference in the upcoming presidential election. Lawmakers say it's long past time for the administration to send a direct message to Putin that the U.S. will respond immediately and forcefully to any interference. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Nancy, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly and Alex Steele here with you on a Thursday afternoon. And Alex, you alluded to this in our conversation with Dr. Toner. You know, we're going to learn a lot over the next few weeks as we return to office, some companies slowly but surely, as we return to school, or we don't return to school in some cases. And one of the most read stories on the Bloomberg today, the headline by Amanda Gordon, hedge funds beloved NYC school ditches in-class learning in 2020. We have seen this before. We're talking about Success Academy.
Yeah, so this was Success Academy was founded in 2006. They have about 20,000 students, and this is one that the hedge funds really like to raise money for and be a part of, etc. Many of their schools are co-located inside some of the broader public school systems where access has been relatively restricted, but it does just show that like high-density in-person learning is just really, really tricky and impossible maybe. And this comes just, days after de Blasio pushed back public school openings, so which is supposed to be the 21st. So you have to wonder if other public schools are going to bite the bullet on this one too.
Right, and it feels like different private schools are taking different approaches, and you've obviously had this diaspora of sorts, out to the Hamptons and up to states as far away as, at least in the Northeast, as Vermont and New Hampshire. You can't get much further than those in terms of people either remotely learning from there, having their kids remotely learn, or even enrolling in schools in different states. This is a moving target, to say the least, but Success Academy, very well known to our audience, I know.
Yeah, and also I think that part of the issues, too, are just hybrid teaching can be quite difficult for teachers because, they're not the same lesson plan. And I'm biased. My best friend's a public school teacher, and she was taking me through it over the weekend, and it sounds horrible to have to do that. So there also just might be that teachers can't be in multiple places at once. So to sort of harness all the resources.
That's absolutely true. And anyone who's been on a conference call with some people in the room and some people remote knows it. It's Bloomberg.
True.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. September swoon. We are bouncing along the bottom. Equities tumbling by the most in almost 3 months as the rotation away from high-flying tech names gains steam. Investors questioning the sustainability of lofty valuations. S&P retreating from a record also set for its biggest drop since June amid declines in Apple, Microsoft, Amazon, and Facebook. Right now, we've got the S&P lower by 126 points, down 3.5%. The Dow is down 815. That is a drop of 2.8%. NASDAQ is down 582 points, down 4.8%. 10 years up 730 seconds with a yield of 0.62%. Gold now down $8 the ounce, lower by 0.4% at $19.34. And West Texas Intermediate crude down 0.3%, $41.40 for a barrel of WTI. Again, recapping here, sharp losses for the U.S. stock market. S&P down 126, down now by 3.5%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Well, it's a great week because we do it every 4 years, according to Joel Weber, the special election edition of Bloomberg Business Week, a double issue. Even more special because for the second time this week, we get to talk with Josh Green, national correspondent for Bloomberg Business Week. Joining us on the phone from D.C., Joel Weber, the editor, the aforementioned editor of Bloomberg Business Week. He joins us from Massachusetts. And kudos to you, Joel, for working Josh Green extra hard. He's our go-to guy. I mean, let's be honest.
Yeah, I mean, he's special on all things politics, so we always look forward to Josh. And I think we kept him extra busy on this one. I know that he's been working overdrive for weeks, if not months. This story, part of I think the big framing of the issue, like I've mentioned before on the program, is we try and look at the electorate in our election issues more than thinking about the race as the horse race between candidates and about who's going to win. It's more about the people and the places, particularly. And Josh had this thesis that actually dates to the before times when things were a little different, pre-pandemic. And he said, look, the story of the election isn't one that's about the divide between urban places and rural ones. It's about the suburbs. The suburbs are going to decide who wins this election. And that stuck with me. I thought it was genius. And actually, I think the pandemic has only made that story more relevant. And to tell that story, he focused on Maricopa County, Arizona. Josh, why Maricopa County?
Well, basically, I mean, Maricopa County to me is a microcosm of the changes happening in U.S. politics over the last 4 years, really over the last 10 years, but they've been accelerated in the Trump era. So Maricopa is the biggest county in Arizona. It encompasses Phoenix, but it also encompasses all the surrounding suburbs. Arizona is a really heavily suburban state. And if you look at where the frontier of U.S. politics is today, as you said, it's not in urban areas, which are ever more Democratic. It's not in rural areas, which are more and more Republican. It's right at the suburbs where rural and urban meet. And Maricopa is fascinating because in 4 short years, it's really swung from a deeply, deeply red county to a very blue one, driven by a lot of the changes that are affecting our politics nationally, both the diversifying electorate, the changing composition of the suburbs, and just changes in political attitudes among white upscale professional voters. Yeah.
So who is polling better? Like, what are the issues, I guess, that the people there actually care about? And then how are each of the candidates and then Trump fulfilling it?
Well, the real issue in Arizona politics, if you go back 10, 15 years, has been immigration. And one of the reasons I chose Maricopa County is because a lot of people think that Arizona politics is kind of a precursor to what happens in U.S. politics nationally. And so one of the characters I focus on in my story is the notorious former sheriff of Maricopa County, Joe Arpaio, who became nationally famous or infamous in the mid-2000s for sort of flamboyant displays of hostility toward illegal immigrants, housing them in outdoor tent city jails, and really becoming a kind of an Ur-Trump. And so Arizona and Maricopa County in particular, over the decade between 2006 and 2016, essentially went through the same arc with immigration that America generally has been going through under the Trump years. And that is, an early embrace of this anti-immigrant sentiment, followed by that sort of going too far, burning itself out. What you see happening in Maricopa is that eventually those suburban voters turned against Joe Arpaio and fired him. And at least judging by the poll numbers that I've seen that both parties have and the focus groups I sat in on of Maricopa County voters, it sure looks like they're getting ready to do the same thing to Donald Trump and get rid of him.
Josh, can we zoom out a little bit? Because I think the most interesting thing that, as part of your thesis here, is like how Maricopa goes, so go the suburbs. So talk to us about the implications for the suburbs, not just in Maricopa, but elsewhere around the country.
Yeah, absolutely. I mean, Maricopa is interesting because the trends we see there are being replicated all across the country, especially in fast-growing, traditionally Republican metro areas. So whether, we're talking Atlanta, Dallas, Fort Worth, Denver, Houston, Orange County, the areas outside Philadelphia, Bucks County, all of these areas politically are changing in the same ways. They're spurning the Republican Party, which has become more Trump-like, and they're embracing at least moderate Democrats. So these are potentially Joe Biden Democrats, but probably not Bernie Sanders Democrats. But the fact that we're seeing that in all these critical swing states, like the Phoenix suburbs in Arizona, a new swing state, Atlanta suburbs in Georgia, a new swing state. Even Dallas, Texas might not be a swing state yet, but it's going to be competitive in the fall, and certainly Colorado, already a swing state. This I think is where not only control of the White House, but possibly control of the U.S. Senate is going to be decided in the fall.
Yeah, it's so interesting to think about that, Josh, and I think back to that huge upset of Eric Cantor a few years ago, and then sort of an upset following the upset. One of the things that you point out so rightly in this story, you've got a great quote about this notion of even the suburbs has changed in many ways. This is not like a Cheever short story in many ways. I live in the suburbs of New York City, and the suburbs of New York City are very different from the suburbs of Atlanta versus the suburbs even of Arizona in some ways. So I love that you dig into that as well.
Yeah, one of the guys I leaned on for demographic information was William Fry, a renowned demographer at Brookings Institution who studies this stuff and said, look, the suburbs do not look like the suburbs looked in 1960, these kind of lily-white, upscale, Mad Men type enclaves of white voters. They look more and more like America. They're diverse, rich, poor, black, white, Latino, and they're voting that way too. And that is not in extreme ways that the Republican Party seems to be foregrounding during the Trump years. And so while Trump's approach to politics has won him extraordinary loyalty among white working class, rural voters all across the upper Midwest and the South, it's hurt him in places like Maricopa County and Phoenix and Houston and Georgia, Atlanta, places like that are looking more and more like they're going to be the deciding geographical regions in this election.
Yeah, absolutely. It's really a terrific piece of reporting, not surprisingly, because it came from the pen and the keyboard of Josh Green. Josh Green, national correspondent for Bloomberg Business Week, joining us on the phone from D.C. Check that story out. It is in the new double issue of Business Week, available on newsstands at Bloomberg.com and the terminal. Our thanks as well to Joel Weber, the editor of the magazine. And for those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week continues right here. We're going to talk to a private equity executive who's thinking a lot more about the world at large. If you're listening on Bloomberg 106.1 in Boston, Bay State Business, that is coming up next. Jason Kelly and Alex Steele here with you on a very exciting Thursday afternoon. Markets upside down. Getting that sell-off.
Yeah, my husband's freaking out. Time to buy.
This is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on a brutal day for the bulls on this Thursday, September 3rd. Steep losses for the U.S. stock market. In fact, we are hitting new lows on the session. The Dow, the S&P, NASDAQ, all declining. Let's get right to the numbers. I'll give you the why in a moment. S&P down now by 139 points. That is a drop of 3.9%. Dow Industrials now down by almost 900 points, down 886 points, lower by 3.1%. NASDAQ is plunging 624 points, down now by 5.2%. Some of the biggest tech names are selling off, including Tesla down 9%, Apple down 7% now, Microsoft down 6.5%, Facebook down 5.1%, Amazon lower by 5.6%. Equities tumbling by the most in 3 months as the rotation away from high-flying tech names gains steam, with investors questioning the sustainability of lofty valuations. Got to keep it locked into Bloomberg Radio right through the close, and of course to find out how Asian markets react tonight. 10-year yield 0.62%. We've got gold down 0.5 now at 1933. The price of oil, West Texas Intermediate crude down 0.5%, 41.29 a barrel. And again, worth repeating, 900-point drop in the Dow. S&P down 139, a drop there of just about 3.9%. Bill Ackman, CEO of Pershing Square, said he held preliminary discussions with Airbnb, Stripe, and others about potentially going public through a merger with his blank check company. And in an interview with Bloomberg Television and Radio, the billionaire investor touched on a number of other topics, including today's market sell-off.
We're not trading at all. I mean, we're not doing anything. We own, as 9, 10 companies. We like the businesses. We're comfortable with their valuations. And we have pretty full positions in each of them. So we're not adding on a day like this, but we're not subtracting on a day like this. We like the companies we own. We think they'll do very well. And we don't put them in the overvalued camp.
And again, recapping, S&P down now by 142 points, down by 4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
And you are listening to a Thursday edition of Bloomberg Business Week, looking at the markets. Alex Steele on a day where, man, you just heard Charlie Pellet break it down. It is a legit sell-off.
Yeah, definitely. And I think that there's so many different ways that you can point the finger at it. I mean, one is the euro came off the recent highs that it had, so that led to some optimism in European equities. They were much stronger earlier in this session, and then that led to more of a rotation into value, which then wound up hurting growth, and then growth just took everything down in terms of tech, just the wipeout there. The question for me is, like, are you going to buy the dip? If you buy it now, you buy it tomorrow, or you buy it Tuesday? Because if yields are this low, how can you go by value? Why do you not just stay into tech and growth? I just don't see it.
And do people ultimately say, oh, remember Jay Powell? He's got my back. I'm going to get back in. We're going to talk about valuations a little later on. But let's take a broader view and maybe a longer-term view of the markets now with someone who is thinking a lot of big thoughts, as he always does, and putting some money to work. Jeff Tannenbaum is the founder of Titan Grove. He joins us on the phone from Long Island. He was the subject of a story earlier this week by Emily Chasen about kinder capitalism, is how she described it in her headline. Really happy to have Jeff with us in the flesh, or at least on the phone from Long Island. Jeff, really nice to have you with us.
Thank you. Thanks for having me.
So tell us about where you're investing and how you're investing, because at a time where I feel like many people are kind of taking a step back, thinking kind of what they want to be, who they want to be, you're making some pretty specific and, dare I say, bold moves.
Oh, thank you. Yes. So, my focus is on problem solving, because I think that's, when you solve problems, you have long-term wind at your back, and you can build businesses that can grow, be profitable, and do a hell of a lot of good. So the industries I tend to focus on are related to climate, energy, healthcare, food systems. Those tend to be really the main areas. And one of my big goals in the arena is to show that you could build businesses that are a force for good that are also highly profitable, because there tend to be skeptics out there in that regard.
How did you come to this? I mean, when you say it like that, it makes a lot of sense. But was there a trigger for you that was like, this is going to be my new investment thesis?
Yeah, I think it happened. So about 7 years ago, I kind of desperately wanted to create a solar company because there were skeptics everywhere. There were hundreds of solar bankruptcies. People had given up on solar. And as someone who wants to create help create a planet that we're all happy to inhabit, it was a big area of focus for me. And I essentially did a lot of research with a great team of people, and we found an idea around building large solar farms. So picture, hundreds, if not thousands of acres of solar panels where you sell power for 20 years. So it's kind of like building a skyscraper where you have a 20-year lease. And we built it into the largest solar company in the U.S. And when we went to sell it, because it was a classic Delaware Corp, we were faced with having to sell it to the highest bidder, because that's the law of the land, as kind of stated by the Supreme Court. So that was the catalyst, and I'll pause there and tell you kind of the pivot that caused. If you have any questions before I do that,
I want to hear about the pivot.
Okay. So what I learned was that there were a couple of Stanford roommates who had built a big athletic company, and they were faced with the same issue. They had to sell it to the highest bidder, even though the second bidder would have done the best thing for the long-term health of the business. They sold it to the highest bidder. The business suffered. And they went out there and said there has to be a better way. And they created a new code of law called a public benefit corp. So you can now incorporate in more than a dozen states as a public benefit corp. And you don't have to sell to the highest bidder. You can sell to the second bidder if you think that they're going to do better. You can honor more stakeholders than just shareholders. And it's really given CEOs and boards tremendous latitude to operate without the fear of lawsuits. So they can think about workers, community, and the environment. And I think during the time we're in now, with a lot of the pain and suffering we're seeing and a lot of the protests, I think movement towards many more companies being B Corps will be a wonderful thing for capitalism. And frankly, I think it's necessary for us to have a strong and resilient capital society going forward.
And so it's interesting, Jeff, as well, because, we're a year or so on from the Business Roundtable coming out and saying, we need to think a little more holistically about this. But candidly, it's one thing for them to say it. It's another thing for big investors like yourself to actually do it. Do you feel like money is starting to move in this direction now?
Yeah, I do think it's changing. And I think it's like other areas I've been involved with, energy efficiency, solar, and early on in private equity, that you have the pioneers that get involved. So in terms of the public benefit corps, Patagonia was an early player, Ben & Jerry's. And people looked at them and said, well, maybe these are more like socialist enterprises. And they're not. And I think what you've seen in the past 4 months are some real facts that are suggesting the tipping point is here. And I'll give you a few of them. One is one of the best performing IPOs is a company called Lemonade, which is a benefit corp. Danone, one of a global 1,000 company, announced that they're moving to be a public benefit corp. So that's a massive global company. And then you have a handful of companies like the one I helped build, Lotus, recently, that are in the business-to-business space. So they're not using the B Corp label to attract consumers. And these B2B businesses are having a lot of success. So I think you're starting to really see some major data points along with the tailwinds of the ESG movement, which are helpful.
Right. All right. We're going to continue this conversation. We got a lot more to talk about with Jeff Tannenbaum, founder of Titan Growth, subject of a big and one of the most read stories on the Bloomberg this week. A lot more to talk about on the other side of some news. For that news, for those world and national headlines, we check in with Nancy Lyons. Hey, Nance.
Hey, Jason, the Centers for Disease Control is coming under scrutiny for its guidance telling states to prepare for a COVID-19 vaccine as soon as November. Some worry that the process is being rushed to help President Trump's election chances. But as Bloomberg's Irv Chapman reports, there will be checks and balances.
An independent data safety monitoring board will advise on interpreting current vaccine trials. Jason Farley of Johns Hopkins University noted in a Bloomberg interview.
If there's a strong enough signal that says, hey, there's great response here and it's actually helping to prevent disease, they can fast track a vaccine. We're hearing a lot of anecdotes that the public is mistrustful of going too fast. And rightly so, because side effects and responses from vaccines take time to understand.
Public acceptance matters so that enough people ask to be vaccinated to stop the infection from spreading. In Washington, Irv Chapman, Bloomberg Radio.
North Carolina's top election official is warning voters against trying to vote twice in the November election. President Trump visited the state yesterday and encouraged people who mail in their ballots to also go to the polls on Election Day. White House Press Secretary Kayleigh McEnany downplayed those remarks in an interview on Fox News.
The president is not suggesting anyone do anything unlawful. What he said very clearly there is make sure your vote is tabulated, and if it is not, then vote.
North Carolina's executive director of the Board of Elections, Karen Brinson Bell, says the state will have a system called ballot tracks that will allow voters to track their ballot through the mail and confirm receipt. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
Nancy, thank you so much. You are listening to Bloomberg Business Week. Well, we're always looking for little data points around reopening, anecdotes, et cetera. And one of the places that we've focused a lot on over the course of this reporting, 25 weeks, by the way, broadcasting from home.
Really, 25 weeks?
25 weeks. I was taping our weekend show with a lot of our great interviews from this week. Check that out on the weekend. It drops tomorrow night and plays throughout the weekend. Just a quick plug there. But we have been talking a lot, and I know it's something you've probably been talking about at home and at work, Alex, which is about dining in New York City. Indoor dining not coming back anytime soon. And so Kate Crater has a really great piece, one of the most read stories, that outdoor dining, it's taken on this whole new life, and you've had, you know, happily, because it is New York City, your hometown, a lot of creativity sort of enter in here.
Yeah, and Mayor Bill de Blasio says that he thinks about 80,000 jobs were saved because of letting restaurants open up on the street and sidewalk where they might not have been allowed before. And some get really creative and and there are great pictures in this article about how they do it, and they make it a whole what am I trying to say? You come in and it's a whole thematic feel for it. So that's pretty interesting. I think that my longer term issue, though, is that unless you had a small restaurant to begin with, outside space can't measure up to what you had inside.
Yeah.
And if you don't have the tables, you're not going to make the same kind of money. You're just not going to have the same kind of tops that you would have otherwise.
Yeah. Also, winter.
I know.
There's that whole thing.
I
It's
mean,
going to get cold.
Yeah, until you get to 40? Because you can do heat lamps, right? Like LA does heat lamps into the 40s and 50s, right? Does it get to the 40s in
Yeah,
LA?
I mean, basically what Kate is saying in this article, I think the 40s is pretty rare for LA, but another couple months here, then we come back to the spring, but it's going to be a few difficult months there. So you just want to make sure that these restaurants can hang on. So that's a whole other question, but some creativity. We'll celebrate that. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Dow, the S&P, NASDAQ, steep losses. We are bouncing along the bottom on this Thursday. Let's head right over to the breaking news desk for today's afternoon call. Here he is, lot to tell us. Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks plunging today with momentum names under pressure. Dow's currently down 926 points. S&P's dropped 140, and the NASDAQ is lower by 5.3%. Those FANG stocks, they're down a whopping 6.7%. The U.S. 10-year yield falls to 0.62%. WTI crude futures are down 0.6%, and gold is down 10. All the Dow stocks are in the red, led by 7% declines in Apple and Microsoft. And in other news, Bill Ackman says he hasn't sold a share of Hilton Worldwide. After earnings, CrowdStrike fell 9%. Campbell Soup dropped another 8%. And wrapping things up, DocuSign reports after the bell. Note the shares are down as much as 15% today. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thank you so much, Charlie Pellet. Well, still with us, Jeff Tannenbaum, founder of Titan Grove, also a former principal at Tree. Jeff, I'd love to know kind of how much dry powder you have right now and what's on your shopping list.
Sure. So, with the sale of S-Power and now the sale of Modus, I don't want to give the precise number, but there's probably 80% of the capital that I've received from some of these sales is just sitting in cash. So I got a tremendous amount of dry powder, and my shopping list is really unchanged. It's businesses that have long-term tailwinds. I like the Wayne Gretzky quote of skating to the puck. So it's businesses that are focused on solar, clean energy, businesses that are focused on reducing diabetes in terms of health and food systems, and businesses that are focused on changing mobility in terms of how we all get around and the electrification of the car fleet. And then finally, businesses that are focused on retrofitting the built environment across America, because about 40% of greenhouse gas emissions come from heating and cooling buildings. So most of the businesses I'm focused on right now are private, because that's where I feel like I can make the biggest impact, which is essentially starting or helping build private businesses that become very large, like S-Power, like Modus, and one that I'm involved with right now is called HIG, which I'm very excited by. Essentially, it is equivalent to a rating standard for the global supply chain for products you buy. You'll be able to buy a product and have a sense for how much pollution was emitted to make it, how were the employees treated. And I think that the software company has the ability to revolutionize consumer products in terms of eliminating greenhouse gas emissions and dramatically improving social and labor standards for employees.
So, Jeff, when you think about kind of the time we're living in right now, how much do you worry that, listen, we're in a pandemic, people are giving more thoughts to these issues, people are talking about social justice, they're talking about equality and diversity in a way that we haven't ever or for a long time. How much do you worry that this is just sort of a moment, though, a little bit of a blip, and if we get a vaccine and things get back to normal, that we'll sort of kind of put this aside again and we will silo a lot of these issues back to where they were before, kind of on the sidelines and not as intrinsic to an investment thesis as you're describing?
It's an excellent question, and that's why I'm focused on what I am, because I'm very worried about it. It's on the headlines, which is great right now. Ray Dalio's talking about it. Biden's talking about how inequitable capitalism has grown to be. Joseph Stiglitz is as well. The problem is, because of this one U.S. Supreme Court case, 99% of the companies in America are effectively Delaware corporations or Delaware LLCs, which ties the hands of the CEOs and the board members to truly focus on hiring diversity, equal pay for women and men, honoring communities so you don't do what companies like DuPont and GE did in terms of polluting the Hudson or polluting what's called Cancer Alley down in New Orleans. So I think it does very much have the risk of a passing moment. Delaware just passed a law that enables corporations to convert to a benefit corp on a majority vote. It used to be 2/3, so that will help.
Mm-hmm.
And I also think the venture capitalists and P firms are recognizing that the best talent now wants to work for mission-driven, for-profit companies.
Right.
And I think we could really see a sea change where instead of me having to convince a PE firm that it's a good thing to be a benefit or a B Corp, they're asking for it. And that happened with the sale of Modus. I said, look, we're a B Corp, we're mission-driven, we're incredibly profitable, we're growing faster than our competitors. And they embraced it. And that would have been unheard of 2 or 3 years ago. So I do think that there's the risk of the moment, but I think that the beauty is we have this emerging form of corporate governance that could really take the torch and run with it in an accelerated manner. And that's very much what I'm hoping for.
Well, it was really good catching up with you, and hope to catch up again in the not-too-distant future to understand whether this really is taking hold. Here's hoping. I mean, I certainly personally believe deeply in what you're doing and have some optimism that maybe things are changing. Jeff Tannenbaum, founder of Titan Grove, joining us on the phone from Long Island. Check out the story that Emily Chasen wrote. It's a terrific one. Jeff Tannenbaum bets on kinder capitalism, even for LBOs. Loved reading it and loved catching up with him. A really thoughtful guy, Alex.
Well, yeah, and it's not only, will investors still like this when things get better, but it's also discerning which investments are good and bad. And there's some people who've been in this kind of industry for a very long time and others that are like catching on to the fad because it is a fad. And it's hard to know where that ends up. I think from that perspective, on a public entity perspective, that the SEC could be very helpful.
Yes.
If they could sort of figure out what ESG actually means, then we can start rating companies by it.
Right. And getting a little more specific, as you say, and deliberate and metric-driven about all the E, the S, and the G. We're talking more and more about the S, the social piece right now. Can we measure that in a way? Can we start to sort of measure progress when it comes to equality and diversity? I certainly hope so.
Because that'll make it sticky, right? That'll make people sticky.
Exactly. And if people make money, look, they're going to keep doing it. That's a fact. It's Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, coming up, Thursday edition, chart of the day, song of the day. It's going to be amazing. Alex Steele's going to nail it.
I'm thinking like sadness, sell-off, red.
Yeah.
I don't know. I'm going to come up with some keywords here. I can
Red.
Google fast. That's like a happy song, isn't it?
No.
This is like depression sadness.
That is not a happy song. All right. We're going to play a little bit of that later in the show, maybe, for Alex Steele. Let's head over to Charlie Pellet now to talk about that red trade. Hey, Charlie.
All right, we've got 28 minutes to go ahead of the closing bell here with the Dow, the S&P, NASDAQ, steep losses. I'll get right to the numbers, give you the why in a moment here. The Dow is now down 974 points. That is a drop of 3.4%. Bottom line here, fast-moving markets. The S&P is down 148, down 4.1%. NASDAQ has plunged 682 points, down 5.7%. Got to keep it locked into Bloomberg Radio right through the closing bell to see how things shake out. And, of course, how will Asian markets respond tonight? 10-year yield, 0.62%. 10-year up 8/30 seconds. Gold is down 11 now, a drop there of 0.6%. 19.31 the ounce on gold. West Texas Intermediate crude down 0.7% at 41.24 a barrel. Again, bears repeating a 148-point drop right now in the S&P 500 index. Equities tumbled by the most in almost 3 months as the rotation away from high-flying tech names gains steam. Some of those names today include Apple, Microsoft, Amazon, and Facebook. They are all trading lower. Specifically, among those stocks, we've got shares of Apple down 8% right now, Microsoft down 7%, Facebook down 5.3%, Amazon shares lower now by 6.3%. Among the names reporting after the closing bell, Broadcom shares now lower by 6.3%. 3:33 on Wall Street. Time now for the Small Business Report. Here's John Tucker.
Lou Carrier is president of Distinctive Hospitality Group based in Natick, Massachusetts. He had to close his 5 small hotels for 2 months because of the pandemic. Now, the hotels have since reopened, but he's only been able to hire back a little more than a quarter of the staff. Lou is joining us now. Is there any sign that things are picking up?
We're up, 50, 60% from last year, the same time. So even after we were able to reopen, it's been a real struggle, and it's not a climb out of the ditch. It's really very, very slow crawl.
Have you received any government aid? And if so, is that aid specific to the industry? Does it recognize individual industry needs?
Well, it hasn't yet. We have participated in the PPP program, and that has literally been our lifeline. The concern is that if the House and Senate don't get together here and provide the next level of relief, there's going to be further devastation.
When do you come to the point where the furloughs become permanent layoffs? What's that time frame?
Well, it's begun to happen already across, and certainly in our hotels, we've had people. The most gut-wrenching things that happen is taking people that you've worked with for 10, 12 years and saying, we just know that right now we don't see the future there, and we've had to transfer people from furlough to layoff.
Lou Carrier of Distinctive Hospitality, thanks. And that is the Bloomberg Small Business Report.
And we thank you, John Tucker. All right, it has happened, a 1,000-point drop right now in the Dow Jones Industrial Average. Moments ago, the Dow is now down by 1,000, drop of 3.5%. Recapping on the S&P, down 149, down 4.2%. NASDAQ down 682, a drop there of 5.7%. Again, keep it locked into Bloomberg Radio for the very latest fast-moving markets. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week right here on Bloomberg Radio. Oh, Alex Steele. She looks happy, but
I mean, it gets me kind of juiced up. I'm looking at Jason being like, please. Yeah. I mean, not even a chance.
So I think we've talked about this song a little bit before, Dave Wilson, because we talked about the fact that this song has been covered a little bit, right? Like Tedeschi Trucks, I've heard them play a version of that, but that's obviously not the original.
Well, what you just heard is the original.
No, I'm saying Tedeschi
Yes,
Trucks, obviously, they're doing a cover. Yeah.
You know?
Are you hinting, Jason, right now to find out, or are you
What
officially
happens when
guessing?
you put Eric Clapton and Duane Allman in the same studio? That's what you get.
Yeah.
You know, Derek and the Dominoes, the Layla album, Keep On Growing, absolutely.
Yeah.
You know, a true classic. And it's coming up on its 50th anniversary.
That's
Man,
crazy. That's
it
crazy.
is crazy. But you know what else is crazy?
This
Just
market?
how much of a gap has developed this year between growth and value stocks. Now, you know, basic distinction, faster growing companies, whether you look at earnings or sales or other indicators, and then value means, you know, it's supposed to be cheap when you look at those same yardsticks and maybe asset values. And we know what's going on today. You know, the technology stocks kind of leading the way down. Well, I mean, you're really talking about the growth category there. And you can look at this chart, I suppose, as an indication of why it is that you're getting the kind of reaction today that you're getting, because the relationship between growth and value has become so skewed relative to what it's been in the past. And the way to see that is to do what the folks at Bank of America did in a report. You know, they came out and looked at the relationship between the Russell 1000 growth and value indexes. I mean, they're benchmarks that are pretty widely followed. And if you looked as of yesterday, the growth index was ahead by 42 percentage points, which meant it was up 33%. The value index was down 9%. Now, you've never seen anything close to that on a full year basis. Biggest gap, 27 points set in 1999. Of course, that was the last full year of the internet-driven bull market of the 90s, which then collapsed the following year. And you can see, you know, value really kind of took over for growth throughout the bear market that followed. So what we're seeing now is kind of instructive, if nothing else. If you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net. Yes.
All right.
There we go.
.net. dwilson@bloomberg.net.
That's the one.
All right. Dave Wilson, thank you so much. We'll check in with you right after the close of trading. And I guess I have to correct myself a little bit, Alex Steele, because Lady in Red, I mean, I guess it's not sort of a jazzy song. It's not a sad song, though. It's sort of like a sexy song.
It's more, it's not like a depressing one. It's more just like a calm, like, we're dancing with the lady in red, man. You know, like I'm dumping out of the triple Q long and going the triple Q short.
Yeah, exactly.
If that's a song, that would be what the lyrics would be.
Yeah, the market is...
Songwriter, I am not.
If that was a song rewritten by a trader nerd. In any case, let's get some world national headlines now with Nancy Lyons. Hey, Nancy.
Hey, Jason, Democratic presidential nominee Joe Biden is in Kenosha, Wisconsin this afternoon, listening to residents following the police shooting of Jacob Blake. This is attorney Angela Cunningham.
I don't even think I have the words to describe how I felt when I saw that video. I do remember texting my group of friends and saying, this is really bad. This is really bad. There's going to be protests. There's going to be rioting. I knew that right away after watching that video.
Joe Biden says now is the time to take action to make things better.
I thought you could defeat hate. Hate only hides. It only hides. And when someone in authority breathes oxygen under that rock, it legitimizes those folks to come on out.
Biden also spoke with Jacob Blake as well as his family. Today, President Trump is traveling to Latrobe, Pennsylvania, and will speak this evening at the Arnold Palmer Airport. Rochester, New York is now seeing protests following the release of police dash cam video of the suffocating death of a black man earlier this year. Officers are seen putting a so-called spit hood over Daniel Prude's head. A local community activist, the Reverend Lewis Stewart, says the officers involved need to be fired and arrested.
I'm sick and tired of my people being strangled, suffocated, and shot down. No more. No more.
New York Attorney General Letitia James says her office is investigating Prude's death. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you so much. You are listening to Bloomberg Business Week. Well, one of the most read stories on the Bloomberg terminal, because if there's one thing I can tell you about Bloomberg customers, Alex Steele, yes, they care about the markets. You know what else they care about? Sports.
Yeah.
And you know what else they care about? Hedge fund managers who own sports teams.
So true.
So true. So many things colliding here in this story. David Tepper, of course, well-known hedge fund manager, billionaire, also the owner of the Carolina Panthers football team, as well as the soccer team there in Charlotte. Well, he is cutting employees and taking a lot of heat for it because, listen, sports organizations, they are struggling to some extent because fans generally not in the stands, in some cases not playing at all. We're going to see the NFL hopefully start up in another week or so, but there will be limited ability to go to the stadium, so you need a smaller workforce. He's breaking ranks a little bit with other owners like Mark Cuban, another well-known name to our audience, who is basically saying, listen, I'm going to keep everybody employed until we can kind of get back to business. It's a tough call. I get it, but it's a tough look.
Yeah, right, exactly. Good call, tough look, I guess. I mean, he's not the only one. Let's be fair to David Tepper, right? NFL announced some pay cuts for some employees making more than $100,000. Okay, well, that seems to make some sense. Other billionaires like Buffalo Bills and Sabres owner also laid off 21 people, furloughed more than 100 from his sports company. It's Terry Pagula, but I don't know. When you're worth almost 13 billion.
Yeah.
Maybe you should just let them.
Yeah,
have
maybe just
a job.
like write a check. You know, I mean, the other interesting thing, I think, the other example that's a little bit different, the Atlanta Hawks, because they own their arena. When they turned their arena into a voting precinct, they trained all of their staff as poll workers to keep them employed.
Smart.
There you go. There's a solution. This is Bloomberg.
business app and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell on this Thursday, September 3rd. Steep losses for the U.S. stock market now, looking at a 900-point drop in the Dow Jones Industrial Average, down 3.1%. S&P down 137, down 3.9%. NASDAQ lower by 633 points, down 5.3%. At the worst level of the day, we did have the S&P down by 153 points, down 4.3%. But again, right now, looking at a loss in the S&P of 3.9%. 10-year yield 0.62%. Gold is down 0.5%, lower by $10 the ounce at $19.32. West Texas Intermediate crude down 0.6%, 41.28 a barrel. Equities tumbling by the most in almost 3 months as the rotation away from high-flying tech stocks gains steam. Among some of those tech names that are selling off today, Tesla, for example, down 9.3%. Apple down 8.1%. Microsoft lower by 6.5%. Facebook now lower by 4.4%. After the bell, we will be hearing from Broadcom. Shares lower now by 6%. Recapping, the Dow down 917 points, down 3.2%. S&P down 140, down 3.9%. NASDAQ down 639, down 5.3%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
And it is time for the drive to the close. Let's check in with Ron Carson, Chief Executive Officer of the Carson Group, joining us on the phone from lovely Aspen, Colorado. So, Ron, I got to ask you today, wow. I mean, this has been really something to behold. I'm not sure this is what we expected coming into this week, and certainly not what we've gotten used to. What do you make of this meltdown?
Yeah, well, I think it's actually a healthy thing. I mean, you look at the market up 60% off the March lows, the market trading, purely on momentum, not on fundamentals. And you got all kinds of cash out there chasing a handful of names. You have Apple, Tesla, of course, Zoom. And these markets, these companies, as great as they are, just can't continue to go straight up. But I wouldn't necessarily say, hey, this is a reason. If you're long these companies, you've got gains in them. This reminds me a little bit of the third quarter of 1998. We had the correction. Then the markets jumped right back to trend, up 20% in the fourth quarter, which, of course, set us up for the famous bubble in 1999.
Mm-hmm.
So do you buy this dip, or is this 1999?
I wouldn't buy the dip. I think it's if you have, I would definitely. We're calling it election protection. I think there's a lot of uncertainty out there, and I would hedge my overall portfolio. If you've got large gains, I wouldn't take them, but I would definitely de-risk the portfolio by simply going in and looking what your risk level, your beta is on the portfolio, and hedging some of that out with an out-of-the-money put on the S&P 500 versus taking a certain gain and then paying that tax on it. And for a lot of people, it's going to be a short-term capital gain, which, of course, is a much higher tax rate. So I would hedge here, but I don't think I would be rushing to put money to work here. The market definitely has some work to do to consolidate if it ends up holding its support line.
So, Ron, how does the Fed figure into all of this? Obviously, there was much made, it feels like rightly, about what we heard from Chair Jay Powell at Jackson Hole, or for sort of virtual Jackson Hole last week. That's the world we're living in. But what do you make of that? What do you make of the Fed's role in all of this? They've been such a savior in many people's eyes to date. But what happens from here?
Well, I think that's why you saw, part of that, I think, was already reflected in the market. When Powell came out and said, hey, we're really reshifting our priorities we're going to move inflation to the number 2 position, employment to number 1. I think that signal to the market, rates are going to stay low for a long time. I mean, I think as far out as the eye can see, and of course the market, applauded that and sent stocks even higher. And, the Fed would certainly like to have some room. They'd like to be able to raise interest rates, but I don't think they're going to do it and can't do it anytime soon. We're in a world here, 2020, that we've never experienced before, and neither has the Fed, by the way. And they're learning as they go, as we are. But I think they're going to be very careful to raise interest rates, so you can bank on very low interest rates in the foreseeable future, probably for the next 3 to 5 years at least.
Right. So raise the question, I don't know how you can sell tech for the medium term with that thesis. If yields aren't going anywhere, don't you just have to own the growth names?
Well, I think you can get in trouble a little bit, Alex, there, if just buying it just because interest rates are going to be low. But let me give a counterpoint to that. And I heard Eric Schmidt talking last week, and he made a point I had really not thought of. And when people were asking about valuations in tech stocks, I said, does this shock you? And he said, listen, what we thought was going to take at least 10 years happened in a few months as the world shifted to becoming even more digital. Those that were comfortable with digital communications and doing business digitally are doing it even at a higher level. And even those that have never touched or had any kind of digital experience are now within the digital world. And so I think also markets trying to figure out, how do we handicap that? What is the proper valuation for it? And you bring up an excellent point. With interest rates low, people are really struggling for where to put capital today. I mean, you can't sit in money market accounts, you can't sit in CDs, and bonds have no yield. And then you start looking at, value stocks that really aren't growing, right? Their earnings aren't growing like the growth stocks are.
So that election protection that you mentioned, I love that turn of phrase, by the way. What do you make of the next 60 days as an investor as we see these candidates just bounce back and forth with very different visions of the current world and the near-term world?
Well, the market, Jason, hates uncertainty. And also, if the market starts to handicap, and this is not a partisan comment at all, but if the market starts to handicap that we're going to have a Democratic administration and a Democratic-controlled Congress, which I think the probability is very low for that, that's not going to be good for the market. The market wants there to be, gridlock in Washington. As long as, the politicians can't do too much to mess things up, the markets seem to figure things out on their own. But however, if you start to tilt one way or the other, the markets aren't going to like that. And I think it is very prudent in here to put some downside protection on your portfolio. It's no different than buying fire insurance on your house. You buy it, you hope it doesn't burn down, but if it does, you feel great that you had some protection.
Yeah, absolutely. Well, it is going to be a heck of a 60 days. We know that to be true. All right, really nice to have you along with us on this Thursday, this day when we are seeing a lot of selling. Stocks off their lows, just barely. So we're going to finish in pretty deep red territory here. Ron Carson, Chief Executive Officer of the Carson Group, joining us on the phone with some good perspective. Some perspective is needed, that's for sure, Alex.
Yeah, it's going to be interesting to see how what we do tomorrow also, because you have a long weekend in the U.S. and you have Jobs Friday, and then you have sort of everyone back in full swing next Tuesday. So what kind of positions will be really taken on will be very interesting. Watch the levels.
Back in full swing, pandemic style. We don't
the new normal swinging.
Like. Yeah, exactly. So a lot of big questions and a lot of big question marks, and that may be why the market's finally a little bit uneasy. We're going to get you to the close of trading today on a Thursday in just a minute. This is
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Brutal day for the bulls. Stock sell-off. Folks from Sempra Energy ringing that closing bell, and a losing day for the Dow, the S&P, NASDAQ 100 index. Equities tumbled by the most in 3 months as the rotation away from high-flying tech stocks gained steam, with investors questioning the sustainability of lofty valuations. S&P 500 index retreated from a record. It did fall more than 4% in afternoon trading at the worst level of the day. The S&P was down 153 points, down 4.3%. It did recover somewhat. S&P down 3.5%. That is the most since June. Here are your closing numbers. S&P down 125, a drop of 3.5%. The Dow down 810. That was a drop of 2.8%. NASDAQ plunged 598 points, a drop there of 5%. 10-year up 430 seconds. 10-year yield now 0.63%. Gold down 0.7%, 19.29 the ounce. And West Texas Intermediate crude down 0.5%, 41.31 a barrel. Again, those equity numbers do bear repeating. S&P plunging 125 points, ending the Thursday session at 34.54, down 3.5%. For the year, however, the S&P 500 index still showing a gain of 6.94%, but it was a brutal day, down by roughly 3.5%. Well, as for the reaction to the sell-off, Ron Carson is the CEO of the Carson Group. He was our guest moments ago, right here on Bloomberg Business Week.
Well, I think it's actually a healthy thing. I mean, you look at the market up 60% off the March lows, the market trading, purely on momentum, not on fundamentals. And you got all kinds of cash out there chasing a handful of names. Apple, Tesla, of course, Zoom. And these markets, these companies, as great as they are, just can't continue to go straight up.
S&P down 3.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Move around. Motion creates the motion.
I feel the earth move under my feet. You move like they do. I've never seen anyone move that fast.
All right, people, let's move like we've got a purpose.
Something's called movers and shakers. They cost a little more, but that name cracked me up.
Bloomberg Business Week, Movers and Shakers, with Carol Masser and Jason Kelly on Bloomberg Radio.
All right, let's do a little movers and shakers. So moving and shaking, shake it to the downside. That is for sure. You heard Charlie lay out the numbers there. Let's take a bit of a closer look at the S&P specifically. The bears have it. That is for sure. 449 names down, 54 up. 2 unchanged, Alex Steele. And, we mentioned this at the top of the show, and I think Dave Wilson did a nice job of laying it out. When you look at it in terms of what those few stocks were that were up, you got 2 cruise lines in there. What?
So I think that the narrative that, jobless claims were not great and the ISM number wasn't great, and therefore we had this big sell-off is a little misleading. Not that that isn't true, but if that was the case, then you'd think consumer-exposed stocks and those that are exposed to recovery would be terrible, and that didn't happen. So Carnival up. They're starting cruise line over in Europe. PVH, that was up as well. Ralph Lauren was up. You wouldn't expect to see that if it was truly doubts about the consumer, which I found really interesting. Granted, things like PVH is doing better because of international. So it's still an international recovery story-ish. But I think we have to look in what actually sold off.
And the cruise lines, too, just to emphasize your point, that news was coming in part because you've got some cruise ships sailing in Europe, not here in the United States. So just buttressing your point there. So what were they selling? A lot of chip stocks. NVIDIA, Qorvo, Skyworks, they were all among your worst performers. NVIDIA, which has been the darling of this recovery or this tech surge over this last year, becoming the world's biggest chip maker, that name was down 9.3%. And so that does sort of buttress the argument of people are just like, man, tech got really expensive.
Yeah, and that's why I have a real problem when this becomes like, oh, the bears are out, we're going to see a correction, it's going to get really bad. Because just yesterday, NVIDIA got some serious praise from an RBC analyst that said, look, I'm raising my price target because you unveiled a new gaming chip that's going to be a secular winner in the semi space. That hasn't changed. So it's a price versus valued situation, not a throw in the towel situation.
Yeah, NVIDIA, by the way, it's up 121% this year. So everybody, maybe just take a breath here because this run has been unbelievable. And I just want to reiterate a couple things that I think Charlie said, but worth repeating. NASDAQ up 27.7%, so 28% this year. The S&P up 7% this year. The Dow, it has now given back the little bit of gain it had for the year thus far. It's down 0.9%. But I think it's worth also noting we're in a global pandemic.
Yeah, exactly.
So, let's just chill
Let's
a bit.
Relax. It's the beginning. I mean, who knows? I'm clearly not a market participant. I'm not a market timer. I'm just saying that it's going to be really easy for the bears to jump in on something like this.
Yeah,
and bears
absolutely.
are right twice a day, right? If you look at a clock. So
yeah. There you go. Well, and also let's look ahead a little bit to tomorrow. We're going to get a jobs report. I was glad Michael McKee talked about that at the top of the show. So check out our podcast later to hear some of his wisdom as we head into tomorrow, what we may see. Those jobless claims, I think, especially because of some of the confusion around the numbers and sort of the recutting of the data, that probably didn't make people feel great.
No.
So
and
we'll see
it's
where
going to be
this all
confusing
ends up.
tomorrow. Markets don't like confusion.
No, they do not. They do not. And as you pointed out just a few minutes ago, we're heading into a holiday weekend and then the post-Labor Day new normal, whatever that's going to look like. All right. The VIX volatility, let's take a look at that because, not surprisingly, it was up. It was up 26%, hitting a 3 handle for a 30-plus handle, I should say, for the first time in quite some time, closing at 33.41. This is Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson.
Open up the door, it's Dave. Who? Dave.
Hey, Mr. Wilson!
Hey, Mr. Wilson. Dave Wilson back with us one more time. Talk to us about your stock of the day.
PagerDuty, Jason. It's a provider of internet-based software for managing technical operations. The company name refers to the days when employees with pagers were on duty to address work-related issues outside normal business hours. PagerDuty was founded in 2009 and went public in April 2019 at $24 a share. The ticker is PD. The company's shares surged as much as 150% in their first 3 months of trading. Gains didn't last, though. In March, they fell to a record low at about half their initial price. While PagerDuty then rallied, the recovery was set back after fiscal second quarter results were released late yesterday. Revenue was lower than analysts' average estimate in a Bloomberg survey. The amount billed to customers, otherwise known as billings, was also disappointing. And so were third quarter forecasts. PagerDuty foresaw a wider loss and lower revenue than analysts expected. You put that all together, the results and outlook sent PagerDuty shares to their biggest loss ever. They tumbled almost 26%.
Yikes. It's a big drop. And this is a day of big drops, Dave Wilson.
Absolutely. But even by the standards of today, 26% is a big drop.
It is.
I guess. I'm just like, yeah, whatever. Dow was down 1,000 points, man. That's going to be bad.
Yeah, it is going to be bad.
But if we'll see follow-through selling, that's really what I'm looking for. Clearly the close bad. Clearly, we sold into the close not good technically, but I want to see if the follow-through selling, what kind of that we see tomorrow morning will be a very good indicator of where we will be on Tuesday.
And again, especially given that jobs report, that it's not just a quiet summer Friday. There's actually going to be some headlines for people to trade off of. All right. Dave Wilson, thank you so much. We will be checking in with you tomorrow for all of those insights. In the meantime, we need to get some world and national headlines, and for that, we turn to Mark Mills. Hey, Mark.
Hey, thank you, Jason and Alex. There is growing outrage in a number of cities nationwide over President Trump
ordering the federal government to begin the process of defunding cities over what he called lawless protests. At the White House, Press Secretary Kayleigh McEnany defended the president's action.
The White House Budget Director will issue guidance to the heads of agencies on restricting eligibility of or otherwise disfavoring to the maximum extent possible by law anarchist jurisdictions in the receipt of federal grants.
New York City Mayor Bill de Blasio said Trump's action makes no sense.
The President of the United States, a New Yorker by birth, threatening to take away federal funding from this city while we're still in the grips of this crisis. It just makes no sense.
De Blasio said that New York is prepared to take legal action to block the president's move. Joe Biden and his wife Jill met on Thursday with the family of Jacob Blake, the black man shot by police in Kenosha, Wisconsin. They met privately at the Milwaukee airport before the Bidens went on to Kenosha, where the former vice president, speaking at a church, accused President Trump of encouraging hatred through his words.
It only hides. It only hides. And when someone in authority breathes oxygen under that rock, it legitimizes those folks to come out front of the rocks.
Facebook is expanding its policies to guard against voter suppression and removing a wider swath of misleading posts ahead of the 2020 election. The company also said it will block campaigns from submitting new ads in the week leading up to Election Day, November 3rd, preventing candidates from posting uncontested messages ahead of the votes. Global news 24 hours a day on Quick Take by Bloomberg. I'm Mark Mills. This is Bloomberg.
Thank you, Mark. So maybe it's that market sell-off. Maybe it's looking ahead to a long weekend. But a lot of people thinking about vacation. But the whole process, it has changed. Vacation home booking. This is courtesy of a story via Dow Jones, one of the most read. The window is shrinking and the prices are rising because the whole system's kind of out of whack, Alex.
Yeah, and this is according to some data from Rakuten Intelligence that says that basically Americans are booking vacations closer to their intended date. And so what that does is that Airbnb properties and sort of those kind of rentals are actually higher. Like, so the costs are coming up there. And even at hotels, I mean, even though the pricing power is not the same, but average bookings were made about 17 days out in July versus almost a month a year earlier, which, you know, makes sense because you don't know, are you going to get sick? Is your family okay? Can you get the time off work and all that? So it makes sense why you'd book closer to your date.
Yeah, and you do have people who are like, oh, I don't know really if I can get away at this point. And how safe do I feel? The one thing that we have seen, and this is no big shock, but the numbers are pretty amazing. Home rental winning right now versus hotels, which I totally get. It is much more comfortable. I think you guys rented a house recently, right?
No, we have a house in the Berkshires.
Pardon me.
And that overstating it. It's just like a small little cabin, and it's a long way away from the city. But
quick flex. It's fine. But I do know a lot of people who have rented houses instead of staying at a hotel or a resort. I can't believe I just accused you of renting a home. I apologize.
Well, but also, like, you know, the big sell for us is because you can walk outside without a mask. Like, even in a hotel, you can't do that because there are other guests. Like, so that's a huge thing. And you have your own
space. Exactly. You have your own space, and you can sort of just wipe it down if you are renting a home. And you have seen a surge in that. And even though home rentals are down, hotel stays are down dramatically more.
50% or something? Yeah.
Something to keep an eye on for sure. You are listening to Bloomberg Business Week here on Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, just getting the latest numbers out of Broadcom. Shares are trading higher now after hours, up by 1.4%. Broadcom just reporting its latest quarterly results, and as I mentioned, shares are pushing higher. Third quarter adjusted EPS, $5.40 estimates there, $5.22. Third quarter adjusted net revenue, $5.82 billion. Estimates there, $5.77 billion. So a beat for Broadcom. Shares are trading higher after hours. Just a brutal day for the bulls. Today, equities tumble by the most in almost 3 months as the rotation away from high-flying tech names gains steam, with investors questioning the sustainability of lofty valuations. S&P 500 index ended down by 125 points, down 3.5%. The Dow dropped 807 points, down 2.8%. At the worst level of the day, the Dow had been down 1,025, down 3.5%. NASDAQ plunged 598, down by 5%. Worst level there had been down by 5.8%. 10-year yield 0.63%. Gold down 0.6%, 19.30 the ounce. And West Texas Intermediate crude down 0.5%, 41.32 a barrel. So a losing day for the U.S. equity market. Got to stick around to find out how Asian markets trade tonight. Again, recapping here, S&P down 125, a drop of 3.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly and Alex Steele here with you on a Thursday afternoon. We were just talking a little bit about travel and tourism and how people are planning vacations. So a good moment to check in with Michael Belisario, Senior Research Analyst at Baird. He joins us on the phone from Chicago. It's the official end, really, of the summer travel season coming up this long weekend. So what do we make of what we've seen, and what might we expect going forward, Michael? Because this has been, to say the least, kind of a topsy-turvy time.
It has. Thanks for having me. There's certainly no precedent, but I think what we'll see is we'll probably see the leisure travel season continue into September and into October, because the work from home, work from anywhere environment continues. I think the biggest thing that we're keeping an eye on is the business traveler, right? It's Boston, Chicago, New York, San Francisco, and when do those high-rated customers get back on the road? And right now, it's picking up, but it's off such a low base. We're really thinking we get to the spring when we start to get back to something that even appears to be anywhere close to more normal.
What did you make of the price action today in the hotel stocks? I'm going through some of the ones that you like or that you cover. Choice Hotels, Hilton, Marriott, all basically flat. Hyatt was actually up about 1%. Why?
Well, I think some of it, too, is it's just market rotation. You look at the names that were down 5-10% today. It's the ones that are at new 52-week highs, new all-time highs. These stocks are very far from that. Marriott and Hilton and Hyatt in particular, Choice is much closer. All the travel-related names were up today, or at least relative outperformance. So I don't read too much into today's action, other than all the high-flying names and the fast money stocks took a pause. But Marriott was down, but it was only down 1%. And I look year to date and look where it's at on a relative basis. One day doesn't make a trend, but it doesn't worry me too much, because there's not a lot of fast money in these stocks. It's in all the tech stocks that were down 5, 10, 15% today.
Michael, I want to go back to something you said about business travel, because I feel like that is the billion-dollar question in many ways. And we have seen cycles come and go. We have, seen, and I know people make comparisons from a travel, hospitality, leisure, and business travel perspective to post 9/11, that everybody said, well, we're never going to travel again and everything's going to be different. And that didn't come to pass, and there was a resurgence in travel. But it does, and I'm really basing this on anecdotal evidence because that's all we have at this point, it does feel different when it comes to business travel, given the technology aspect of this having less to do with health and safety and more to do with the habits that we've now all formed when it comes to remote work and being able to say, yeah, let's just hop on a Zoom.
Right, and I think the longer we're in this in-between phase, the harder it is to get back to where we were in January or February. Call me crazy, maybe 3 years from now, 2.5 years from now. I think things will be more normal than we think they will be today.
Yeah.
And maybe it's 10% or 20% of the travel that maybe I and others typically did doesn't happen.
Yeah.
But I know it's not going to be zero, right?
Right.
It's going to be somewhere in between. But I think the toughest part and the hardest thing to handicap is what does the other side look like? And the most asked question we're getting from investors the last 6 weeks or so is, how do you think about 2022, 2023, 2024? How much demand has been permanently lost?
Yeah.
And that's a really tough question to answer. Right now, we're thinking 10, 15%. It could be 25, it could be 30. It's really tough to tell. But to your question, the longer we're in this uncertain phase and the more comfortable people get working from home, working from anywhere, the less travel you're going to do. I never liked working from home. I didn't have a great setup. Now I have a setup. I don't mind working from home as much.
Real quick, we have maybe like 45 seconds. Top pick right now in your space.
Wyndham, drive to leisure business, kind of a misunderstood franchise business model that we think is one that's going to be a relative winner.
All right. Well, we really appreciate it. Really great context on a day when these are certainly names we are watching closely. We're always watching them closely because they're intrinsic to our lives, both personal and professional, and we're grateful for your insights. Michael Belisario, Senior Research Analyst for Baird, joining us on the phone from Chicago. And I think a ton about this, Alex. I just think about what our normal lives were like, both, again, personally and professionally, and, do we get back to that?
I don't know. Your guess is as good as mine. But I was going to ask you, because you were on a vacation to the U.S. Virgin Islands for like a minute, right?
Yeah.
And I wondered, how did you make that call? Was it like last minute?
It was long planned. I mean, it was last minute in terms of were we going to actually do it? And we did it. And even with the quarantine on the back end, I would have rather not had that. But I'm glad we did it. And I'm glad to have the experience of flying and all of that. So more ahead. We'll keep talking about that and much more. In the meantime, for those of you listening in New York and San Francisco, watching on YouTube, Bloomberg Business Week continues. If you're listening on Bloomberg 99.1 in D.C., Sound On with Kevin Cirilli. That is coming up next. Coming up next here, Broadcom. You heard the numbers from Charlie. We're going to break it down with our pal, Dan Morgan. Stick with us. This is Bloomberg Business Week.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you're listening to Bloomberg Business Week. Well, Broadcom shares, they are up in the aftermarket on earnings. We're going to understand why, especially on a day when a lot of the chipsters were punished. Dan Morgan's going to be along in just a minute to share that with us. In the meantime, let's understand what happened in that trade and some of the headlines from Charlie Pellet. Hey, Charlie.
All right, I thank you very much. I do want to begin with a headline after the closing bell. I know you're going to be talking about Broadcom coming up in just a moment with Dan Morgan, but also we did hear from DocuSign moments ago. It reported adjusted EPS for the second quarter that did beat the highest analyst estimate. We've got shares moving higher after ours in DocuSign. What a day on Wall Street. Tough day for the bulls with the Dow, the S&P, and NASDAQ. Sharp losses there. Let's get right to the numbers. I'll give you the why in a moment here. S&P down 125, a drop of 3.5%. NASDAQ down 598, lower today by 5%. Dow Jones Industrial Average down 807 points for the Dow Jones Industrial Average. That was a drop of just about 2.9%. So stocks did post the biggest rout since June as the rotation away from high-flying tech names gained steam, with investors questioning the sustainability of those lofty valuations. Seema Shah is chief strategist at Principal Global Investors in London.
This equity market is still riding really high. It's been driven by a couple of factors. There are some things that really do concern me about it, and that's in the last few days, this real emphasis on the vaccine. We know, of course, we've heard the news that November is a likely date. But the question is, how realistic is that? How effective is the vaccine going to be? And how much are people going to really adapt it?
And today we did see the Dow, the S&P, and NASDAQ all declining sharply today. S&P down 125, as I mentioned, lower by 3.5%, but worth repeating. 10-year, the yield there 0.63%. Gold down 0.6%, 19.30 the ounce. West Texas Intermediate crude down 0.5%, $41.30 for a barrel of West Texas Intermediate crude. Shares of J.P. Morgan Chase, Bank of America both lower today. However, Deutsche Bank upgraded both stocks, saying bank stock performance is about to get better after lagging amid pandemic-induced revenue concerns. We saw shares of J.P. Morgan Chase lower today by 0.3%. Bank of America lower by 0.7. Again, recapping here, equities lower, S&P down 125, a drop there of 3.5%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Well, Broadcom, we got some numbers from them. Let's check in on what it means with Dan Morgan. He is Vice President and Senior Portfolio Manager for Synovus Trust Company. Well-known voice and trusted voice to our listeners and to us, joining us on the phone from Atlanta. All right, DM, what'd you make of this? Because we needed some good news in tech today.
You're right, Jason. Hi, Alex. Looks like a really good number. And as you mentioned, it looked like the whole sector was really trading kind of down going into this report. And this kind of offers some reassurance that, things are still very viable in the semiconductor and technology area. Of course, earnings came in at $5.40 a share. The street was looking for $5.21. Revenue was $5.81 million. Consensus $5.76. I think what really stood out to me, Jason, is the guidance going into their upcoming fourth quarter, because they came out and said we're going to do $6.4 billion. The street was looking for about $6.2, which is very strong because it then gives us fuel for the fire, right, in terms of encouraging us that the semiconductor sector is going to continue to go forward and be very strong. So those were good numbers across the board.
Which brings us to sort of the broader tech issue today, because it was the semis that got hit the hardest. So when you see numbers and proof of like, oh, right, okay, the semis do have really good businesses, do you look at what happened today as a revaluation or just a shakeout, or are we finally at the correct price level for these stocks?
Well, Alex, I would view it as just a slight pullback. I think the fundamentals are still intact for the recovery in the semiconductor group as a whole. We have to remember, Alex and Jason, that this group has done unbelievably well, right? It has surpassed the entire S&P information technology benchmark in terms of performance. And, it's been unabated here really over the last, since the COVID pullback, right? Yeah. It's been unbelievable, almost like a rocket ship. So, I think we're going to see a little bit of profit taking, but we still have to feel that this Broadcom report would reinforce the bulls in terms of the chip sector recovery.
Well, and I was mentioning, Dan, I'm sure you were busy doing other things and not hanging on my every word, but I did mention NVIDIA, which was one of your worst performers today. But, you know, that stock is well more than doubled over the course of this year. I mean, the demand across the board and the underlying demand, and I know you look very closely at that, does seem to be intact, both enterprise and consumer. True?
Right, Jason. We talked about NVIDIA a couple of weeks ago, remember? Yeah. And we talked about the strength in the data center. And, you know, we look at, let's say, a Broadcom here, tremendous strength in the telecommunication wireless build-out that we're seeing. We talked before about this, that 25% of their revenues come from Apple. And, of course, there's all this excitement about the new 5G phone coming out. So, you know, the weakness is probably going to be in enterprise, and it's probably going to be in industrial and autos. And both NVIDIA and Broadcom don't have a real huge amount of exposure in those spaces. So because of that, they're doing extremely well. And Jason, you and I are old seasoned chip guys.
Seasoned,
so we remember back to the Texas Instruments and the Analog days and the Micron Technologies. And those are all different companies in terms of the areas that they're exposed to. But Broadcom and more NVIDIA, they're definitely positioned in the right spaces.
So do you buy the dip for some of these names that you like right now? Like, what's a good strategy when, as you say, some fundamentals super strong?
Well, we talked before, Alex, that not all chips are created equal, right? Mm-hmm. So Broadcom and NVIDIA are both on our buy list. You know, those are stocks that have made big runs. Obviously, you know, for investors, you want to try to catch them when they pull back a little bit in terms of, you know, if it makes sense for that particular investor's portfolio based on their risk tolerance and objectives. But, yeah, I mean, I think, you know, they've made this huge run, so obviously you have to be careful in trying to find, you know, what an entry point that makes sense for you.
All right, we're going to leave it there. Thank you so much to our pal Dan Morgan. Always good to hear his voice, get his insights. Vice President and Senior Portfolio Manager for Synovus Trust Company, a trusted name to me, certainly, and to our show when it comes to the tech world, and especially, as he alluded to, the chip sector. He and I have been doing this together for a long time, and watching this business and how it has evolved and how it has evolved into just a more and more important sector there.
And just so everyone, I mean, they're not like 100 years old, okay? Like, they haven't been around since the dawn of time.
We haven't been around since, like, Silicon Valley was invented.
Let's just, like, be clear on that point.
Exactly. But, you know, I mean, seasoned.
Yeah. But I do wonder if Broadcom's able to give some kind of stability to the chip names, considering they had a bullish forecast, and they're helped by things on data center spending and the smartphone shipments. So it'll be interesting to see if those names that are geared towards that can stabilize tomorrow.
Yeah, absolutely. Yeah, people have relied heavily, as Dan said, on those names throughout this bull market in the tech sector. So much more to come. We're going to talk about tech valuations coming up with
I'm so excited.
One of your pals. This is great. I mean, what a timely booking that is for sure. That's coming up next. In the meantime, let's get over to some world and national headlines. For that, we turn to Mark Mills. Hey, Mark.
Hey, Jason. White House Press Secretary Kayleigh McEnany responded to accusations that the administration is pressuring the Food and Drug Administration to approve a COVID-19 vaccine before Election Day. Senate Minority Leader Chuck Schumer issued a statement today saying President Trump is applying pressure for a vaccine to help his re-election. McEnany told reporters the White House is not sacrificing safety to make a vaccine available as soon as possible.
This president wants to break through regulatory barriers to get a vaccine as safely to the American people as quickly as possible because lives are at stake.
Governor Andrew Cuomo said New York State will review whatever vaccine is recommended by the federal government.
Before we recommend New Yorkers take any vaccine, we will have the State Department of Health review it.
Democratic presidential candidate Joe Biden is in Kenosha, Wisconsin. The former vice president met with the family of Jacob Blake. The 29-year-old black man was shot in the back 7 times by a white Kenosha police officer. Speaking at a local church, Biden said he had spoken earlier by phone with Jacob.
He talked about how nothing was going to defeat him, how whether he walked again or not, he was not going to give up.
House Speaker Nancy Pelosi and Treasury Secretary Stephen Mnuchin have agreed to work to avoid a government shutdown right before the election. and not let the stalemate over virus relief legislation hold up a vital stopgap budget bill. Global news 24 hours a day, on air or on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Mark Mills. This is Bloomberg.
All right, Mark, thank you so much. You are listening to Bloomberg Business Week. Well, one of the things that kicked off the entire idea of having our next guest on, we're going to get to him in just a few minutes, was everything that's been going on with Tesla. And I sort of brought it up randomly on our show call this morning. And Alex, you basically were like, yeah, I got a guy who can talk about this.
I know a guy.
I know a guy. But Tesla's been fascinating, right?
Yeah, so we're basically teasing Aswath Damodaran of NYU Stern School of Business, who is like the guru of valuations. Talks about Tesla a lot, but we really want to get his take on overall tech. But what's interesting with Tesla is you weren't the first to say this. Guy Johnson said this on our editorial call for TV, being like, Bailey Gifford jumping out yesterday, like that has people kind of freaked out that there was a top here. It's a significant move to the downside. But I was arguing that it was just a position recentering and that they do want to add more of the valuations right. And it brought up the conversation of what's something worth versus what it's actually trading at. Because they're very different things.
I like that you just basically very subtly told me I'm not special or smart. It's okay.
No!
You're like, yeah, I heard that before. Oh, cool. Yeah, you want to talk about Tesla? Everyone wants to talk about Tesla, bro. Where have you been?
Your mom called me and wants to talk about Tesla.
Seriously.
Okay.
But I mean, it
but
is...
thanks for bringing it into the show.
Yeah, but oh, cool. Tesla. Heard of it. But it is a fascinating read into this market, the psychology of it to some extent. It's a consumer product, obviously, a car that everybody loves, but it's a stock that is so galvanizing in some ways for any discussion about valuation and technology and batteries and cars.
I like that you use galvanized because their battery day is coming up at the end of this month.
You know what?
So it's sort of, it's a good word play.
I'm just trying to prove that I'm smart now and not just like, we should talk about Tesla.
But you... Aw, but you're pretty.
Oh, well, thank you. Thank you. I wear nice T-shirts. I get it. I see where this is going. Looking forward to our next discussion. Stick with us. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Chipmaker Broadcom delivered a bullish forecast helped by spending on data centers, and it predicted a rebound in shipments of smartphone components. Shares up after hours by about 1.5%. A brutal day on Wall Street. Steep losses for the Dow, the S&P, and NASDAQ. The mega-cap tech shares that had driven stocks to record retreated today. We did see the S&P 500 index dropping by 125 points, down 3.5%. NASDAQ plunged 598 points. That was a drop of 4.96%. The Dow was down 807 points, down 2.8%. 10-year yield 0.63%. Gold down 0.7%, 19.29 the ounce. And West Texas Intermediate crude down 0.5%, 41.31 a barrel. Stay with Bloomberg for Daybreak Asia tonight to find out how Asian markets react. S&P lower by 125, a drop of 3.5%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. So now the long-awaited guru of valuation, Aswath Damodaran, professor of finance at New York University. Professor, it's always good to catch up with you. You had a great post talking about market efficiency in terms of, price and value, and that they're different. Yeah. Based on that lens, what's up with the NASDAQ today? What happened, in your opinion?
Well, I think trying to explain day to day why the market moves, it's an exercise in futility. If you think about it in a larger context, easy come, easy go. You've been making a lot of money really quickly, and today you gave back some of it. If you think of it even relative to where you were a week ago, you're probably still ahead. So from that perspective, I just think the market had gone up too quickly and over too short a period, and too much over that period. And this was just, I think, a natural adjustment to that process.
And so is it, knowing the behavior as you do so well, Professor, was this just something where everybody sort of just kind of caught on to this idea? It felt a little bit, I don't know, sudden to some extent. How did it sort of build up, or was this sort of hiding in plain sight and it was just a matter of time?
I think when you think about pricing, it's always a momentum play. And we've never quite understood what makes momentum shift and why it does. And I'll give you an example. On March 23rd, at the absolute bottom of this market, if I talked to you about mood and momentum, it would have been abysmal. You said, there's no end in sight, the world is going to end. And guess what? On March 24th, for whatever reason, and there was no fundamental reason, some real reason for this to happen, the mood and momentum shifted. The same thing happens when the momentum is up. There will be a point where the momentum overreaches and it corrects. It's why traders make money and lose money. You live with the pain and you live with the gain. I think it was just a momentum shift. There were little triggers you could point to. Maybe the jobs numbers were not as good as you expected. Maybe the virus, the vaccine is not coming out, but you're reaching. And trying to put a veneer of rationality on what happens on a day-to-day basis just makes us feel better, but it doesn't do much.
So what does it mean for, my husband who, texted me a couple hours ago and was like, oh my God, did you see what's happening in tech? So, what do you do? Do you buy, do you sell, do you hold the NASDAQ, do you hold Apple, Tesla? What does it mean for the everyday person?
Yeah. Whatever your husband is using to track the market on a minute-by-minute, hour-by-hour basis, ask him to get rid of it.
Yeah, no, it's the Times. He's not really doing that. Don't worry.
He's old school.
I think in general, I think we track markets too much and in continuous time. And as human beings, when you can see what's happening in real time, you tend to overreact. So I think my advice to people is don't overreact to the good stuff. Don't overreact to the bad stuff. Investing is not about getting rich. It's about preserving and growing wealth. And from that perspective, what happens on any given day should never alter your life plans. So I would tell them to, this too shall pass. There will be a week from now, you'll be calling you and say, should we buy now? It looks really good. And your advice will be exactly the same. Don't overreact to what's happening on a day-to-day basis.
chill out, read a novel or something. I don't know.
Or you know what? Just keep working.
Yeah.
But Aswath, let me piggyback off that for a second. How do you think about valuations now when the Fed has basically said rates are going to be here for a very long time? How do you run a valuation model?
I mean, investing is always relative. If I were making 7% on T-bonds, there's no way I could justify where stocks are today. Right now, I'm making less than 1% on T-bonds. Relative to what I can make on treasuries or on bonds, stocks look okay. But that's a relative statement. To the extent that you believe that rates will come back up, that the economy will recover, you could argue that maybe stocks are overreached because we're right now pricing stocks to earn about 5 to 6%.